All right. Hey, everybody. Sorry for the late video here. Better late than never. I am up in Oregon, Portland, Oregon, putting in offers on a house. So I've been scrambling around doing that all weekend. So apologies for not getting this out sooner. Just wanted to give a quick weekly market update and share my thoughts. So going into Friday, we had a really nice, strong close on the S&P 500. Uh, Nice break of horizontal resistance here. Nice follow through and close above the resistance channel and the diagonal resistance. So really nice chart setup on the overall broad market S&P going into the weekend here. We are a little bit overextended on the weekly chart, in my opinion. We've gone up without making a pivot, basically. Oh, what was that? Almost 9%. So ideally, I would love to see a little bit of consolidation here, and I'm going to zoom in on the weekly chart. If we can consolidate and go sideways for a few days, we've broken, like I said, the small horizontal resistance level around 400. Ultimate is going to be up around 410 on the S&P futures chart. Let me switch to that real quick. That's going to correspond to the 4,100 level that we've been talking about for several weeks now. Still waiting for that ultimate horizontal level to be broken because, again, for an uptrend to really be defined on weekly chart, we need higher high and higher low with a new higher high. So right now we have an equal higher high with a higher low in place. We need to break that final line in the sand of 4,100 before really truly saying this is an uptrend. Currently, I am more defining this as a slightly bullish neutral trend, but we are above that diagonal resistance. We have now gotten above and confirmed above all of our weekly moving averages. So that is super, super bullish. Going into the weekend before doing my scanning, I had posted and said that I was really excited for this trading week ahead because there was going to be a lot of really good trading setups. While that is true, unfortunately, we do have a lot of economic known news events coming out. And that's something that I always try to update you on. So on Tuesday, we have Chicago PMI numbers. Wednesday, we have not only the manufacturing PMI, but we also have employment changes, non-formal employment changes. And the biggest thing is going to be the FOMC meeting statement. That always moves the market. So we are going to need to be a little nimble this week, even though there are a lot of individual good chart setups because of how much data is coming out this week. And each one of these, especially the ones marked in red, have the power to move the market significantly in one direction or the other. So if you are getting into the market this week, if you are planning on taking advantage of the good setups that are out there, know that there is a lot of news that might change that analysis quickly. Be sure to use stop losses to protect yourself and exit out if it does roll over and go against you. So that is my disclaimer. On top of the known news events, economic wise, we also have a ton of earnings. So this is a little hack for you guys. If you go to finviz.com, I don't want that. Go to finviz.com, click on maps. And then down here, it defaults to 1-day performance, and it'll show the scale down here from -3 up to +3 as a gradient based on the percentage of price movement. Go ahead and click that and drag it down to the bottom, and you're going to see earnings date. So we are right in the middle of earnings season right now, and there's also a ton of economic data coming out through that. For short-term traders, a really good rule of thumb is to not take a trade on a company if they have earnings within the next, say, 2 weeks. Some traders shorten that down to about 10 days, but 2 weeks is a really good time frame for that because there's not enough time for your trade to develop and make the run you're looking for before that event comes up. And earnings events can rock a really good setup either way. It can make a gap up or it can make a gap down, and there's just too much risk there to be able to develop the edge against the market that we are looking to exploit as short-term traders. A really good example of this was Intel from last week. So this is a weekly chart. Let me go to daily chart here. So you can see on the daily chart, this was a beautiful trade setup, and I had a trigger here looking to play a breakout of a long-term consolidation pattern up to the 200 period moving average here on the daily. But earnings was coming up, so I was not playing anything on this. I was just kind of patiently waiting, liked the bottoming pattern. But when earnings came out, it gapped down and opened down 11% on open. It did recover about half of that, but it ended about 6% down. And that can be really, really painful, especially if you're playing in the options market on any of these companies where your position is leveraged. So that's just one example, but this has been happening a lot. Goldman Sachs, I believe. No, not Goldman Sachs. Was it Morgan Stanley? One of the banks. No, that was actually a misprint candle. Oh, here, yeah. It was Morgan Stanley. So they gapped up on earnings initially about 5.5% and ran all the way to 7, almost 8% on their earnings. But these are just two examples of a gap up and a gap down where there's just too much volatility to be able to play it and have an edge. You can play it, but you're going to be gambling. So just a heads up on that. But going back to FinViz really quick, because of the earnings date sort here, and we can see this bright pink on the key below means that we are still before earnings. The darker pink is plus 15 days, so further out. And the darker pinkish, like reddish, is over 30 days out. And then the green shades are all like in the past. So any of these stocks that show green, any shade of green, those have already passed earnings, and those would be the places that honestly I would be looking to trade. So a lot of the financial companies have already reported. Some of the software companies, a lot of the software companies have already reported. Aerospace and defense has already reported, but a lot of these other industries still have major players that are going to be releasing earnings this next week. If you see a lot of these, so February 2nd for Amazon, for Google, for Apple, Pfizer is coming up on the 31st. LLY, Eli Lilly Company is February 2nd. ExxonMobil is the 31st. So there are just so many big companies that can kind of make or break a trend in the larger market for reporting earnings in the next week. So it's going to actually be a lot harder to trade this coming week than I originally said when I posted saying, hey, like watch out for some really good setups coming in. Unfortunately, earnings has kind of messed up a lot of those trades. So going to Amazon, for example, Friday's bar here was just a gorgeous breakout on a little bit of a higher volume there. MACD running up, like beautiful chart, but earnings is coming up on the 2nd, so I could not play that breakout. And we're just seeing that over and over and over again in the market. So instead of actually going through and showing stocks to trade this week, I'm actually going to be holding off for the most part on opening new trades and just closing trades and taking risk off the table tomorrow, and then watching to see how the economic data plays out over the course of the week. But just a real quick thought looking at the market, still looking for a breakout on crude light. You can see we actually had a really nice breakout attempt here. It has failed and gone back into neutral territory. So we're just basically looking for these moving averages below to hold. I'm assuming, excuse me, I am assuming that we're going to see more neutral action, maybe a day or two down, finding support down here at like the 78, 78.22 area, and then coming back up in the next few weeks to retest and finally break out. That is kind of my base case right now. But this chart's going to take a little bit of time to develop after Thursday and Friday's movements. Next one on the S&P, we already looked at this briefly, but it does feel a little overextended to me. So I'm looking for this to kind of chop underneath that 41 level and staying somewhere above probably 4,000 or 39.75, somewhere right in there. So as long as it stays above the 20 period moving average, really is kind of my new line in the sand. And then ultimately down here at like the 39.25, area. I'm kind of viewing that as more slightly neutral to slightly bullish, just because we need a little bit more time for this to develop to give us a really good quality entry. And that's obviously what we're looking for. Bitcoin futures, just to look, definitely overextended, but awesome to see this price movement in it. This cryptocurrency realm is finally waking up a little bit. Just in the last couple of weeks, it has run just shy of like 40%. So obviously very overextended. You can see here the red on our RSI shows that anything above 70 is overextended. And on the MACD, even though bullish with both MACD lines over the zero line, the blue MACD line is starting to curve and roll down. And we're going to get a crossover here soon, most likely. That is a short-term sell-off indicator. So on this, we're kind of looking for it to either go neutral or pull back and chop around the 20 to 21,000 mark for a little bit and hopefully give us a nice retrace to be able to play. Going down to gold, still absolutely loving the strength in gold. It is kind of in this nice upward flag or pennant, just riding this 9 EMA until it breaks below that 9 EMA or this diagonal support line. I'm still interested in playing it higher. I think we can go up to like 1990 or 2000 probably pretty easily. If we get that next breakout, that, is a pretty clear line in the sand up here from a lot of the upper wicks and pivot points from previous history in the chart. But we have run a ton over the last few months here. So it is a little bit overextended on the weekly chart. I wouldn't mind a pullback in this and being able to get in to other gold stocks on a pullback. So if we go into NEM, for example, this is one that I had mentioned back here in the consolidation zone that has performed beautifully coming up and breaking through the 200. But now we need this to chill for a little bit and hopefully pull back to give a new entry. So waiting on that. Going down to the Russell. The Russell actually looks probably better to me than any of the other index charts. We have a beautiful double bottom here. We have kind of a elongated inverted head and shoulders here. Actually not even head and shoulders, like a cup and handle really. So this would be the cup and this would be the handle here. Looking to break out of the resistance zone around 1930. If we do break out and confirm higher on that, I would be targeting up to the top of this previous pivot, somewhere around 2035 probably. But ideally, again, I would love some chop and some sideways action here. Let these moving averages continue to curl up because they'll eventually act as more support and push the price higher if those hold. So in my ideal scenario, we would just kind of chop sideways here for a little bit and then break out, and it would give us a higher pivot low to then put our stops under to protect ourselves from the downside and give us a good risk to reward entry there. And then finally, just to look real quick, silver. Silver has a little bit of a rounded top that I'm not liking as much as I did a couple of weeks ago. You can see that here on the daily chart as well. We had a really clean line in the sand at about 2475 to 2480. It has kind of given this little rounding top. It has pulled back a little bit here from the highs, but it hasn't done anything wrong. And silver is a choppy instrument. So as long as it stays closed above the 50-period moving average here at around 2320, let's say, I don't think it's done anything wrong. It just ran so hard and so fast here that it's taking a while for price action to digest before another leg higher. So that's kind of my base case for silver. You can see really without creating a pivot from one to the other, this thing ran about 36%. And if you know anything about playing futures, that is a massive, massive movement. So anyways, I'm kind of hunkering down and waiting on that chart to develop a little bit more. I do have a feeling that we are going to hold support here, but obviously nothing is guaranteed, and gold and silver are both really tied to the US dollar. It weakened a little bit on Friday here, but it is overextended to the downside still, in my opinion. And there is a chance that we might get a little bit of a bump here. Any volatility in the dollar index will most likely this week be due to the economic reports that come out. So that can impact gold and silver heavily in one direction or the other. So just be keeping an eye on that UUP chart. And then finally, to wrap up, we have the Dow Jones Industrial Average. If we put this out on a weekly chart, I mean, it's only down now about 6.3% from the highs. So it has recovered the far majority of its sell-off. I would love to see some consolidation here for a while before a breakout. I don't know how much interest I have right now on a breakout if it goes soon, because it's already run so much, and I think it needs to consolidate a little bit more. And there's just not as much upside possibility to be able to really entice me in a move on this index right now. So that's a wrap. My suggestions for this week, honestly, are if you're new, just track the economic reports, try to understand the price action that happens at the time on the chart that those get released, and even go down and drop in to like a 5-minute chart or even a 3-minute or 1-minute chart and see what happens when these kinds of economic reports come in and the volatility that comes in, and then see how the price responds from there, and get to know those reports so that in future reportings, you can look at it and you can have an idea of what might happen and prepare yourself for that to be able to profit from it. And then last thing, going to that FinViz chart again, looking to see what earnings dates are coming up. And if you are trading this week, just be really, really certain that you are double checking that the earnings are at least 2 weeks out or they are behind us for this earnings season. So hope that helps, guys. Trade as much as you want to this week, but definitely be cautious. And I would recommend limiting the amount of risk and the number of trades that you take this week, just based on how much economic data is about to come out. So anyways, I will update throughout the week. And as these reports come out, I'll try to chime in and share a little bit of my thoughts on it, and we will just go from there. Hope that helps, guys. Bye.